Ecuador, known for its breathtaking Andean landscapes and rich biodiversity, is at an economic crossroads. The country is grappling with a significant economic slowdown, a reality felt acutely by its citizens. In late 2024, Ecuador faced a severe energy crisis, plunging the nation into darkness with 10-hour blackouts. This crisis forced businesses to close, people to lose their jobs, and cast a shadow of uncertainty over the nation's economic future. Ecuador's economic narrative is not unique. Many developing countries, particularly those reliant on commodity exports, find themselves in similar situations. The global economic slowdown, fueled by geopolitical uncertainties and supply chain disruptions, has exacerbated these challenges. For Ecuador, this slowdown is not merely about numbers on a balance sheet, it's about the daily lives of its people. The World Bank estimates that over 20% of Ecuador's population lives below the poverty line. The economic slowdown threatens to push more people into poverty and erode the hard-won gains in living standards achieved in recent years. To understand Ecuador's economic slowdown, one needs to unravel a complex knot of interconnected factors. This section examines 5 key areas: GDP growth, unemployment, inflation, interest rates, and the debt-to-GDP ratio. Ecuador's GDP growth has been sluggish, hovering around 2% in recent years, a significant decline from previous years. This sluggish growth is attributed to weak global demand for Ecuador's primary exports, such as oil and bananas. Internal issues like political instability, limited foreign investment, and weak infrastructure further hamper growth. While official unemployment figures hover around 5%, underemployment is rampant, with many engaged in informal, low-paying jobs. Inflation has become a persistent concern for Ecuador. Using the US dollar as its currency provides some stability, but limits Ecuador's ability to control its monetary policy. Interest rates in Ecuador are relatively high, making borrowing expensive for businesses and individuals. Ecuador's public debt has been steadily increasing, with the debt-to-GDP ratio reaching concerning levels. This high debt burden limits the government's ability to invest in critical areas like education, healthcare, and infrastructure. Ecuador's economic heartbeat, its GDP growth, has been alarmingly faint in recent years. The decline in oil prices in the mid-2010s exposed the fragility of Ecuador's economic model, which relies heavily on oil exports. The situation worsened with the COVID-19 pandemic, which disrupted global supply chains and further dampened demand for Ecuador's exports. As a result, Ecuador's GDP contracted by 7.8% in 2020, the worst performance in decades. While the economy rebounded slightly in 2021 and 2022, growth has remained tepid. The World Bank projects GDP growth to hover around 2% in the coming years, insufficient to generate enough jobs or significantly improve living standards. Low productivity, limited diversification, and a lack of competitiveness plague the economy. Section 4. Unemployment in Ecuador, a tale of two realities. On paper, Ecuador's unemployment rate might seem relatively low. However, this figure masks a more complex reality, the prevalence of underemployment. While the official unemployment rate hovers around 5%, a significant portion of the population is trapped in precarious, informal jobs that offer low wages, no benefits, and little job security. This informal sector absorbs a large share of the workforce, particularly women and youth. These individuals, though technically employed, often live precariously, earning barely enough to make ends meet. The education system struggles to equip young people with the skills demanded by the modern job market, leading to a mismatch between skills and available jobs. Section 5. Inflation and interest rates, a difficult balancing act. Using the US dollar as its currency since 2000, Ecuador relinquished control over its monetary policy, making it more challenging to manage inflation. While dollarization initially brought stability, it also exposed Ecuador to imported inflation, particularly in food and energy prices. To combat inflation, the Central Bank of Ecuador often resorts to raising interest rates. This measure can help curb inflation but also makes borrowing more expensive, potentially slowing down investment and economic activity. Section 6. Debt dilemma, a looming shadow over Ecuador's future. Ecuador's public debt has been steadily increasing in recent years, casting a long shadow over the country's economic future. The debt-to-GDP ratio has reached concerning levels, exceeding 60% in recent years. Several factors have contributed to this debt accumulation, including the decline in oil revenues, increased government spending, and the impact of the COVID-19 pandemic. Servicing this debt consumes a significant portion of government revenue, leaving fewer resources available for essential public services like healthcare, education, and infrastructure. Section 7. Navigating the path ahead. Policy options and outlook for Ecuador. Navigating Ecuador's economic challenges requires a multi-pronged approach that addresses both the immediate concerns and the underlying structural issues hindering long-term growth. Tackling inflation requires a delicate balancing act. While raising interest rates can help curb inflation, it also risks stifling economic growth. The government should consider a combination of monetary and fiscal policies, such as targeted subsidies for essential goods and services, alongside prudent government spending to reduce the fiscal deficit. Addressing unemployment requires a focus on job creation, particularly in sectors with growth potential. This requires investments in education and skills training to equip the workforce with the skills demanded by the modern job market. Encouraging entrepreneurship, particularly among young people, can also be a powerful engine for job creation and economic growth. Diversification of the economy away from its reliance on oil exports is crucial. Investing in renewable energy, tourism, and value-added agricultural products can create new sources of income and reduce vulnerability to global commodity price fluctuations. Attracting foreign investment is another critical piece of the puzzle. This requires creating a stable and predictable business environment, tackling corruption, and ensuring a level playing field for all investors. Addressing the debt burden requires a combination of fiscal discipline and debt restructuring. By implementing sound economic policies, investing in education and human capital, and creating a favorable environment for investment and job creation, Ecuador can chart a new course towards sustainable and inclusive economic growth. Section 8. Global economic trends and their impact. Understanding global economic trends is crucial for Ecuador's future. Shifts in major economies, trade policies, and technology can significantly impact smaller nations like Ecuador. Experts warn of a potential global economic slowdown. Economic uncertainty in major economies could reduce demand for commodities, affecting Ecuador's oil exports. Ecuador relies heavily on oil exports for revenue. The shift towards renewable energy presents both opportunities and challenges for Ecuador. Investing in renewables could diversify the economy but threatens the traditional oil sector. Transitioning to a greener economy requires significant investment and strategy. Trade policies and international relations are critical. Changes in trade agreements and tariffs can impact Ecuador's market access. Trade tensions could disrupt global supply chains, affecting Ecuador's exports. Technological advancements are reshaping industries. Embracing technology could boost productivity and create new opportunities. Investments in digital infrastructure and education are essential. Ecuador should monitor global trends and adapt its policies. Staying agile and responsive can help Ecuador navigate challenges and seize opportunities. In conclusion, Ecuador's ability to adapt will be key to its future prosperity. By leveraging expert insights, Ecuador can thrive in an ever-changing world. Section 9. Technology and Innovation Catalyst for Revitalization. As Ecuador navigates the global economic landscape, technology and innovation emerge as powerful tools for revitalizing its economy. Embracing digital transformation and fostering innovation can unlock new growth opportunities. One successful case study is the rise of Ecuador's fintech industry. Companies like Kushki and Payphone have developed innovative payment solutions. These startups promote financial inclusion by reaching underserved populations. Another area of potential growth lies in the agricultural sector. Advanced technologies like precision farming and IoT devices can improve crop yields. Initiatives like the Agritech program provide farmers with cutting-edge tools and training. In conclusion, technology and innovation hold the key to revitalizing Ecuador's economy. By leveraging successful case studies and focusing on growth areas, Ecuador can build a more resilient and prosperous future.